All right, we'll jump into this. All right. What's up, everybody? Welcome back to Clear the Cash. I'm your host, Nate Liss. You can find me on Twitter at an outraged Jew. And with me, of course, is Mr. Jesse Bak. You can find him on Twitter at planet_fatness. And tonight we have a great guest with us. This is somebody that listened to one of our prior episodes where we were talking about Top Shot, NFTs in general. And I put a call out to the world and said, listen, we need somebody that has a fiscal background. We need somebody that understands economics. There's a lot more to this than just the hype that we all feel for things that we have an inherent bias towards. And so a guy by the name of Corey Leavenworth, you can find him on Twitter at Fantasy Numbers, reached out and said, hey, I check a lot of the boxes of the guy that you're looking for. So he's on with us tonight. Corey, thank you for coming on, man. How's it going?
It's going good. Thanks for having me, guys.
Yeah, not a problem at all. I know Jesse's excited. We've been talking about this back and forth. We tried to make this happen over the past couple of weeks. Really just couldn't nail it down. So I'm glad that we can make this thing, finally a reality, because I know that you've got a lot of really unique theories and thoughts, and obviously things that are based on reality out there that rarely get talked about as part of the reason why we're seeing some of the trends that we're seeing. So Corey, I mean, let's go right off the top here. So just so people can get an idea of kind of who you are and what you're about, what is your background?
Yeah, no problem. So I studied finance and economics in school. I graduated right around the global financial crisis in 2008. I was fortunate enough to get a job at a commodity futures in foreign exchange trading firm. I passed my Series 3, got a job as a broker working on the currency trading side on the speculative retail side for about 4 years. From there, I transitioned my currency trading to the corporate hedging side, where I was a foreign exchange dealer for a few years, providing foreign exchange solutions to U.S. corporates by way of FX spot and forward contracts. And then I kind of worked on the opposite side of the phone. I got a job working for a large U.S. corporate in their treasury division, managing a portfolio of foreign currency derivatives to hedge against our foreign currency exposure. So yeah, it kind of led me here. I've been working in the markets for about 12 years. I heard your original podcast and reached out.
Yeah, man. I mean, and a lot of that, admittedly, even for me, who I don't have a ton of experience in a lot of the areas that you're, addressing at this point, a lot of that goes over my head, Corey. I'm going to be honest with you. That was a foreign language to me. I don't know if it was for Jesse, but it certainly felt like it was for me.
I'm just in the healthcare and card world. Anything else, I'm not really. I'm not too versed with. So yeah, that's a little bit above my head too.
So, Corey, you also mentioned when you were reaching out that you are an artist, or you do artwork on the side. You do physical art, even though this is an episode that has a lot to do with digital art.
Right. So I have been painting on canvas for my entire life, about 28 years. So I do abstract acrylic. And so the whole NFT space was really interesting to me because I think a big benefit of the blockchain and NFTs is really connecting kind of buyers and sellers. Because me painting canvases and kind of advertising on Instagram and local kind of galleries and shops, I have an extremely small kind of audience who I'm selling to. So I think it's really interesting, the whole NFT space and in digital art, really connecting buyers and sellers globally. The technology behind it is very interesting, but the price action is obviously for the reason of discussion today.
Right. Oh, well, absolutely. I mean, but it's great because you've got this background in the economics. You understand the art side of things and what these people that are creating this content, or these, again, these NFTs are what their goal is, what they're looking for. So it's a good space to come from, because again, some of the backlash on the last episode was that the episode was very biased, that we sounded like two guys that were into cardboard and had nothing and no interest to do with anything digital. And I certainly didn't want it to come off that way. But admittedly, when we looked at the market and the trends that were taking place, they didn't correlate whatsoever to what we were seeing in the card market, in a space where we expect to see a little bit of similarity between two commodities that do share parallels, right? So I'm glad that you came on today. Now, your Twitter handle is at fantasy numbers. So I'm gathering that you do some fantasy football gaming yourself and maybe do a little research and data homework. Is that true?
Yeah, it is true. I mean, this podcast is going to be about economics, art, fantasy football. I mean, it's literally straight up my alley. But yeah, it's kind of it really is a small world. So I've been playing fantasy football now for a little over 10 years. I started as kind of casual, high school redraft kind of a format. And then I discovered you and Matt and kind of Roto Underworld, which led me to playerprofiler.com, which led me to the statistics and analytics that provides. So which led me then to getting a voucher for FFPC Best Ball. And now kind of 100+ leagues later, I've really kind of enjoyed that. So I think Best Ball is very unique in the sense that it's extremely close in the rules and regulations to redraft. And I think a lot of people think Best Ball is kind of redraft plus upside. When in reality, I think it has a lot of upside to do with managing your exposures and managing risk. I think if you join a few leagues that are kind of high in value, but you're in less than 10 of them, some of your player exposure is, 33%, 50%. But if you draft a large portion of best balls, it really allows you to have a bold take or not a take on a player in draft, zero exposure, 50% exposure, and then kind of smooths out the variance in the meantime. So that kind of led me to Player Profiler. And then kind of the one person in our very small Twitter sphere that I agree with quite a bit and agrees a little bit with me is your boy Josh Larkey.
Yeah.
So it's kind of funny how small the world is. So kind of that small listening to Roto Underworld brought me to those analytics. And now I'm kind of head over heels into best ball. And I love that format.
I love that you brought up Josh Larkey, because as I'm hearing you say the things that you're saying from your intro to what you just said there, I'm like, this guy, I got to hook him up with Josh Larkey. If Josh isn't already following him or talking to him, they need to, because I feel like you both have a very data-driven sort of binary process, and that's a great way to play. I mean, especially if you're in it for money. I like to play loose. I play probably way too loose at times. But just like you said, your exposure, really buying in on a player, it gives you the opportunity to truly sell out on somebody you believe in. I know Josh does a ton of homework. It sounds like you do a ton of homework. So I'm really excited. People check him out on Twitter at Fantasy Numbers. Again, I was making a joke earlier pre-show about at Fantasy Numbers. Like, that to me, like, I think everybody that creates a fantasy account is trying to get that name. And I'm sure you must have a crazy amount of views on your account that you don't even know about, because people are just like, son of a bitch, the name's been taken, because it really is a good name. I'm sure that's what Josh Larkey was going for before he inevitably had to settle on his own name.
I know. You kind of see the available domain names, and once you see one that kind of has the availability, you just kind of jump on it. So, yeah, I saw it. It was available. I took it, and we'll go from there.
Yeah, I mean, you're a champion forever because of it. I mean, obviously nobody was after my name, and certainly nobody was after Jesse's name whatsoever. But I know Jesse really wants to get into this episode. He wants to pick your brain, and I do too. So Jesse, take it away.
Yeah, honestly, with my name, if anything, I'm probably having people that are headhunting for me. Especially the corporate leaders over at Planet Fitness they probably blocked my account already, and they're trying to figure out where I live just because of my name. Yeah, Corey, honestly, I found Nate the same way. I was a loyal listener to the Sonic Truth Pod and all the podcasts on the Roto Underworld Network and Breakout Finder for years before I reached out to Nate and basically utilized my resource of playerprofiler.com and the Breakout Finder to actually like help me with what I think having a pretty significant advantage in the card game. So yeah, it sounds like we kind of reached out to Nate in almost the same exact way. But just to kind of kick things off, I just wanted to get your thoughts on what do you think about the overall concept of Top Shot and the NFT market in general?
Yeah, no, that's a fair question. And I think you brought it up best last in the podcast where we talked about NFTs, and you said it's very much in its infancy stage. And when we look at an asset, and especially Top Shot, that you kind of, I know it started earlier in 2020, but really kind of picked up the momentum in 21. It's kind of like an IPO, when the fact that as soon as it debuts, you don't really have a lot of history on what it is, and especially when it kind of breaks into a new sector, you don't have a lot of comparables in that sense. So you kind of have the blockchain element. You have the ridiculous kind of economic status that we're all in. So I mean, it's a very interesting conversation, and I think anyone that proclaims that they are an expert in trying to guess what will be valuable in the next 15 years is maybe a little too hyper bullish in a certain sector, and nobody really knows. And as I told Nate, that it kind of really sets up the conversation for kind of an open dialogue and really see what we've seen in the past, what are the current economic conditions, and really where we're going. So I think Top Shot kind of brings about 3 points that kind of bring Top Shot to where it is, and also, most importantly, besides the technology, the price. I think the price action is what has really driven the headline. So as we look at the first point, we can look at where are we in terms of an economy. So we kind of take a look back to 2008, and we see that we've maintained a massive initiation of quantitative easing. So when we had the real estate scare in 2008, we instituted a massive money supply, pro lending. I mean, it's a very pro risk kind of a monetary policy. So we saw that, and the market realized right away that we love low interest rates. We love these growth companies. We love these tech companies that we currently have tech companies that produce negative net income, but we somehow still pay CEOs and below that, I mean, millions and billions of dollars. So they've really indirectly through VCs or directly through the bond market taken advantage of a flattened yield curve. And what they've really done is they've given themselves a runway to profitability. So they don't need to show they're profitable in 2021. They need to show growth in that they have the potential for future runway kind of in the future. So what that has really done is exacerbated inequality in wealth. And it's really kind of peaked up the froth in the bubble to really take risk in saying, what has my fiat done for me lately? And what can I do to maintain a big sort of speculative return in the short term? So we saw in February, we saw treasury yields rise, and we saw crypto fall 20%. We saw these frothy tech companies kind of fall a big chunk. And the risk really is the tech moving forward. These companies that really don't have really any sort of profit on the balance sheets to step forward. So that kind of takes us into where we currently are. And then we had kind of the mother of all government-led recessions, and that came in the form of COVID. So COVID, for the positive or negative, was a government-led recession where the government told you not to drive, not to spend money on travel, not to spend money in the restaurants. And this led to $1.6 trillion of pent-up income. We see this with Trump and Biden really pushing a fiscal agenda forward, where we're giving stimulus checks. We're really, flowing this free money economy, where we have people in the hospitality and the restaurant industry that have been unable to come back to work because in all 50 states, we're now paying people in the lowest income not to come back to work. And they're now getting more money from the government. So we have a lot of people kind of sitting at home being told that they can't go back to work. We have record low interest rates. And we see this recession, and we see that certain recessions are systemic disorders. But COVID was global. We saw the unison sort of collective effort by all central banks to push their interest rates down to zero, and really push the fiscal help that was needed. So, 3% of people absolutely were helped via the policies, and were kind of helped from being on their ass. But we saw a lot of people also be pushed towards risk-taking assets. And that's really kind of where we were with the GME and in the whole, meme stonks era. We saw that with certain crypto, and now we see that in this sector as well. So that kind of leads us to our conversation today.
So I guess what it makes me wonder is this just the perfect storm? Again, people, stuck at home, pent up, disposable income, and a great product? Or like Jesse asked the question about sort of the Top Shot in general, is the product itself something that you see viability in? I mean, is it a good product, or again, is this just really people not having anything to spend money on?
Yeah, sure. Well, I mean, first and foremost, I think people need to be aware that the world is extremely gray, and it's not black and white. And it's possible for there to be a lot of bored, pent up income with these risk perverse assets. And also, I mean, NFTs and Top Shot being maybe long term viable. I think it's very well in the realm of possibilities for this to have some sort of long term runway. But at the same time, you see a lot of people that at this point in time, when we're recording in April, are kind of stuck at home and have some time in front of the screen. We've seen employers be able to trust employees that they are able to kind of sit at home in front of their screen and do the same work. So it really is interesting to kind of give a quick preview into the so-called metaverse. We've seen employers be able to realize that their employees' location really doesn't matter. And I think that will eventually lead to increased competition in the workforce, and employers be able to find better employees if they remove the whole location aspect. So I think it's hard. I think you can't judge the long-term view of Top Shots without seeing the actual long-term view. I mean, we really haven't had any type of economic slowdown in a very long time. So, I mean, we look at baseball cards. They've been around for 150 years. They've been around, a lot of different economic cycles that we have seen. You look at people that collect cards like yourself. They aren't looking at the day-to-day mark-to-market of their card. They're not selling when it goes down 10%. They're more inept to pass it down to different generations. So I think Jesse said it best. We're in the infancy stage, and we really don't know until that price action kind of recedes. What happens to your average NBA Top Shot consumer when your mortgage interest rate doubles, when your auto loan doubles, when you have to go back to work, when the stimulus packages stop, when the presumed inflation comes in Q3, Q4 this year? What will really happen to that sector? And then also, what happens to that sector when we have increased supply? So if we see Dapper Labs branch off to baseball, NFL, soccer, if we see celebrities, if we see musicians, what does this money supply do when that sort of expands? And I think a lot of people that we've seen on NBA Top Shots have been falling into two categories. We've seen people that are very heavy into crypto, and we see maybe some NBA fans as well. So what happens when this expands and we see 9-10-fold the market share? I really don't know what happens with tighter economic conditions plus exorbitant supply. And Jesse, you kind of mentioned last time there was a LeBron James card that sold for like $250,000 that was of a 50. So I guess, can you talk a bit about the supply and how that compares against the card market versus, we see a kind of a trapped supply in NBA Top Shot, and then the long term, we see there could be, much higher supply. So yeah.
Well, at least for right now in cards, well, in Top Shot, we only have a couple months worth of data, if that, because, I know this, I know Dapper Labs and Top Shot all came about in 2020, but really, like, it hasn't reached the mainstream until January of 2021. So we don't have nearly as much data, whereas with, a LeBron James gold Topps Chrome refractor rookie card has, we're going on 18 years of data here. So I mean, I know right now we're in more of a bull market, but just we just have a lot more sales history of a card, even if it's that scarce, even if only 50 of them exist, and regardless of condition. At least we just have, we have the data, and it's a physical asset. It's something that people have been, collectors and people who have been in it for more investment purposes. They've been trying to acquire it at some point in time, and especially LeBron collectors and people that, I know of people that do have that card personally, and they're not looking to part with it anytime soon. Like we have a term called coffin cards, where basically they don't even, there are some people that don't even want to pass it down to their kids. They want to be buried with it, and it's gone forever. So but then again, there are other people that once they're kind of at the end of their lives, or if they want to prepare for retirement or something, maybe they'll pass it down to their kids or other future generations, and they can have that for as long as they want to to help start their lives and their children's lives. So we're definitely dealing with, in terms of cards, there's much more of a nostalgia factor, and there's a little bit more of a chase and a collector base than something like the NFT space.
My concern with this too, Corey, you brought this up. You said, what happened when mortgage rates double? What happens when auto rates double? And I made a statement on the podcast that we've been referring to from a couple weeks back. And I basically said, nobody who bought Top Shots did it because they saw long-term viability in the hold. Everybody was playing this short-term game. Everybody saw these no-name, a block of 50,000 going for, $2,000 or $3,000, and everybody thought that they had a ton of value, because if you're on Top Shot, it shows your value of your assets. So people treated it like that was some sort of real value. I guess my concern is, when we look at cards, we know that there's a long-term value in cards. It's been going on for decades. We know what's worth what. We know what will have long-term value based on its rarity. But you made a statement earlier. You said nobody knows. And that's my concern with Top Shot overall, is that nobody knows the outcome, but yet a lot of people are telling you, buy, buy, buy. It's going to be great. Look at this LeBron that sold for $250,000. That's the future. When in reality, I stand by my statement that nobody who bought Top Shot didn't list everything that they got, right? Like, everything that you got is on the market. There's nobody that bought something and is just holding everything in the background, if that makes sense. I think that's my biggest concern with it.
I think genuinely, from like a collector's perspective too, out of any NFT, maybe not NFT, probably more Top Shot, out of their entire user base or the history of their user base, I can see 0.01 to 0.05% of that whole user base actually seeing this as a viable collectible, and whether or not they have intentions to invest it and sell it decades down the road, or just have it just to have, and maybe over time it just naturally appreciates. Like, if we can maybe Top Shot something like the I think it was the 2016 NBA Finals LeBron series-saving dunk, basically in game. I think it was in Game 7. Like that might be something that if NFTs can be viable in the future, that might be something that can actually become iconic and actually be worth something down the road. And I just wanted to kind of take it back to your artistic side, and you said you've been painting for a little bit. Do you think that your appreciation, like, how has your appreciation of art impacted how you see, or if you even see, NFTs as an art form in general?
Yeah, I think first things first, as an abstract artist, I can't subject anybody to any negative emotions if it, if it calls to you. I'm an abstract artist. So if somebody says they like something and it calls to them and they like it, I'm the last person to call them, incorrect in that sense. Art has always been of eye of the beholder. But I think with this NFT space, sort of two things. I think one, how close are we to the quote unquote metaverse? Did that start kind of with the Pokemon Go, and people are walking around and kind of in their physical world collecting that, versus people collecting art and showing them to their internet friends on their computer. I think we have to keep in mind that less than 4% of the population is on Twitter, and of that population, how much has the exposable income to invest in something that they look at their PC about? I think we also see that we're in a cusp of massive opening in the country. We're right around 25% inoculation. Our goal is 70% to really open the economy back up, as the FOMC has said. So kind of when we see that massive explosion in leisure, in hotel, and kind of retail, are people going to want to show their internet friends their gift that they paid, whatever Ethereum for? So I think it's very hard. I think you see the quote unquote future as moving towards the metaverse. I think erosion of that physical landscape. I think there's a lot of bullish sides. I think the favorite thing that Wall Street has is a new sector. So I think if luxury goods and architecture kind of move towards the metaverse and they see that as kind of a new wallet share, that absolutely opens up a new kind of precipice for how we classify GDP versus the physical world versus the metaverse. So as the population explodes and as location kind of erodes, it's very interesting kind of how that moves forward. But I think you see a lot of people that invest in crypto that a few years ago, who I talked to, had zero interest in digital art. But all of a sudden, because you kind of put a border around the scarcity and there's a ledger of who made it and who bought it, all of a sudden it's thousands of times the value it would have been. So kind of a contrarian take. I do wonder if the quantitative easing in the appreciation of assets, including crypto being a risk asset, has appreciated towards that. You see people that are paying 50 Ethereum for an art piece, and it kind of hits the magazines as, look at how big this purchase has been. When in reality, this person may have just been, kind of a tech savant and have purchased Ethereum for a few $1,000s, and now it's worth this price tag amount that's kind of hit the headlines. When in reality, they weren't really a big art collector, and they may have just been appreciative because of this massive black swan event within COVID. So it's a very interesting topic, and nobody has the answers. But let's say this. Let's say I have an abstract piece of art, and I say, "Hey, Nate Liss, I'll sell this to you for $5,000," and you say, "No, thank you. Watch this," and you can simply copy that or recreate that. You would never pay me $5,000 for a one-of-one piece that you can simply recreate down to the absolute pixel. You wouldn't do that. And then if Jesse was looking for a piece of abstract art and he saw your piece for $100 and my piece for $5,000, but I said, "Hey, Jesse, my piece has a fraction bit of metadata that says I am the original." You don't care. That's something that's placed in your home. So it's very difficult to kind of differentiate the digital from the physical, when there's not a person on the planet that can recreate my sort of art. I can't recreate my art once I paint it. Versus if you have a digital painting, if you do a digital piece of artwork, you can sell it as a one for one, and then a week later, you can edit that piece and theoretically change the color or something else, and all of a sudden you can then adjust the scarcity of it. Whereas if I do artwork, it is literally one of one. I couldn't reproduce that abstract art if I tried 100 times over. So somehow somebody that does digital art but places some sort of border of scarcity around it is worth 100, 1,000 times more than my artwork. But then again, it is all the eye of the beholder. I was in an art competition a few years ago, and somebody beat me by quite a bit of votes. Who just I think they had the word war written in like blood or like grass seed, and it was like way more worth more than mine. And it's like,
Yeah.
I really don't understand that.
It brings me back to, art is very subjective, right? Whether it's price, who loves it, who doesn't love it. I kind of want to ask you this question as somebody that clearly spent a lifetime doing art. You kind of made a statement there where you mentioned that if somebody can create a one-of-one digital piece of artwork, and then they can alter it simply by changing the color or some variants to it, very simple. Does that bother you from the standpoint that I would imagine what you do takes a lot of effort? And then you see something like this, it's very simple. And even the statement you just made where this one person decided to do something brazen and they created this very, something that was supposed to be, self-meaning or important moment. And then it's worth more than yours is, when in reality, what you've done is probably incredible in its own right. But then you look at these NFTs that are going for hundreds of thousands, not if millions of dollars, and they could take literally no time to put together, and some may take more time. But is that something that kind of irks you a little bit?
No, not at all. I mean, as I told friends and family, as they asked me how do they get into the trading of the meme stocks, get yours and get out, and I'm extremely happy for you. Good for the people that kind of saw this coming, and took the effort to list their art and really take advantage of the technology at hand. So no, I hold zero kind of grudges against people that have sold art for more than me. It's kind of funny. I sincerely love making a piece. And when I put a price tag on it that's above cost, it makes me laugh every single time. Whether it's, 2 times above cost or 10 times above cost, I'm like, I would have made this anyway. And, it's a little secret that I have that, I would sell this to you for at cost if you really begged me for it. So, it really doesn't irk me too much. It's not paying my mortgage, so to speak.
Sure.
It's been kind of a hobby all my life since I've worked in finance. So, if anything, the blockchain has really enabled people to connect buyers and sellers. And I think above the authentication of who made it, or the ledger, or where it is, or if it's authentic, I think connecting with the buyers and sellers is the massive point that will be proven over the next few decades. My audience, despite people who may have seen my Instagram, like I said, is people at coffee shops. I have artwork at random kind of barbers and flower shops in my local Midwest city. But digital art kind of gives you the landscape that it really efficiently kind of sorts the supply and demand. And eventually, I think, despite just kind of being first in line, I think that the top, the cream of the crop will kind of rise in the NFT space, and the best art eventually, I think it will create a really nice landscape for artists. And you know what? If somebody wasn't into art a few years ago, that because of this, they got into art, then, I champion them. And I thank you for kind of entering the segment. So it's a very interesting topic. And I know a lot of people kind of bring up, copying the Mona Lisa, and it kind of looks the same. You look at a Monet, and if somebody can take a Monet, and if you've ever seen a Monet in person, some of them are 20 feet long. If somebody can replicate a Monet with a paintbrush and you can't tell the difference, then that painting is probably worth a lot of money.
Right.
So I think we say this digital copy thing very, in our 280 characters or less. But in reality, if somebody can paint the Mona Lisa with a paintbrush and you can't tell the difference, that's an incredible artist. And kind of as that broaches the topic of kind of, frauds and kind of, copies, I think that's very popular in movies and in media. But in reality, copying art in fiat. That's an extremely low percentage of the population. Is it a big deal on the large scale? Yes, it is. But in reality, if you had a very nice oil painting you paid like $5,000 for, trust me, it's never going to be an issue that was a replica of somebody else that made a painting worth $5,000.
Right. No, I totally agree. And it's just interesting because, we talk about making copies of things. And I think there's people out there that might not understand that despite the fact that these are they're on the ledger, they're on the blockchain. We know that Corey Leavenworth was the creator. This is the first of this kind, but now we've made a copy of it, and it's become its own thing as well. You're the originator of it. There's people out there that, like you said earlier, they may not care that the original version is worth more if they can just have a copy of it. I mean, it's the same thing when people buy prints, I would assume, versus, an original. I know lots of people that have bought prints, and some prints go for a lot of money. There are some artists out there that sell, and they've made thousands of the same print, and they still go for a lot of money. I don't know that that's a thing yet, that the fraud is a thing yet. I'm sure it's something to be worried about in the future, especially kind of the questions for me with artwork. And maybe you've done some thinking about this as somebody that's clearly, deep in the art world. How is digital art to be displayed in the future? Right? Do we picture some sort of, like a digital frame that holds things? I mean, kind of where do you see digital art going?
Yeah, that's a very interesting topic of conversation. Is really, when does that quote unquote metaverse kind of take hold? And I think what people aren't understanding is the equation of, when is new art in a metaverse digital world going to take place, when you're kind of wearing these VR goggles and you're kind of immersing with your internet friends, and you have your house and all of your paintings. I don't know when that's going to be, but what I can tell you is that we will have a new bearish economic cycle before that is mainstream. So I think that's a big thing to recognize. Is a lot of people look at the micro in investments, but when in reality the macro always holds true. And we saw that with COVID. We saw some of the most profitable companies of all time tank during the COVID collapse in last Q1 mixing with Q2. So I really don't know where that kind of lands. I know that eventually, I really do think the metaverse will take hold, and that location specific will erode. But as far as what happens, from now until then, I don't know. I think we have a good case study in the stock of Tilray. So Tilray is a marijuana producer that IPO about $30. Shortly after IPO, it was up to $300, I think, in $60. Now, if you were to go back in time and you told those Tilray investors at 300 that, what, a few years down the line, marijuana is going to continue to legalize. It is going to move off the black market onto the official market. We're going to see a massive state by state kind of deregulation of marijuana. That person would have probably bought more. But Tilray went from $350 to about $5. So I think investments in trading is always a representation of how far in the future can I pull those future cash flows present. And I think a lot of people in the NFT and NBA Top Shot space have said, listen, we're moving towards this digital world. I know that's where it's going, and it's going to be worth more in the future. So you got to pay me 20x what it's worth now, because I know this is going to be there in the future. But again, we don't see people, bottling fresh water in land and selling it for 100 times what it's currently worth now. So as we see kind of investments, it's kind of this saying we say, buy the rumor, sell the fact. And we saw that with Coinbase, as soon as it debuted, it tanked. How do you represent future cost representation versus what is happening now? And I think a lot of people see this world moving digital correctly. I am a big bull of the metaverse, but where that lies in the current price, it's really anyone's guess.
That honestly brings me to the question that I want to ask you. is the valuation of these moments in Top Shot specifically, right? So we saw LeBron James cosmic dunk moment sold for, I think, $208,000. Now, again, as somebody that's heavily into the card thing, it makes me roll my eyes a bit. But when I take a step back and I think about the world of art, it's not so crazy to me that, as you mentioned before, in the eyes of the beholder, to someone, this is worth $208,000, right? And is that where we're at, or is there actually some sort of baseline that we can use as an indicator to truly value these things?
Yeah, I mean, we really don't have that. I mean, we really don't have history. We don't have price action. We don't see, what occurs during a bear market. I'm very curious if we had this froth of NBA Top Shots during the COVID crisis, when we saw everybody and every firm sell every single risk asset and buy US dollars. What would that mean to NBA Top Shot? And I think that kind of brings me back to, we look at the Dutch tulip bubble. We saw the Viceroy tulip that was 5 times the size of your average house. And I think you have your average investor that has these NBA Top Shots that is, we'll just say, kind of a middle income type individual, a middle risk kind of averse kind of person. And, they put $1,000 into a risk asset, and all of a sudden it's up 1,000x. And they say, I have a car payment, I have a mortgage, I have all of these bills. And at the end of the day, are they going to hold for that purple Lamborghini, or are they going to hold for the utility that they have kind of sitting in front of them? And when I was a broker, this is what I told people all the time: is trader psychology is the number one killer of profit. Before you enter into any sort of risk asset, you have to understand, what is the risk capital that I have put forward, and then what is the loss I am willing to take, and then as this accumulates, what sort of profit am I willing to sort of give up? Because if 1,000 people hold out for that lime green purple Lamborghini, I'll tell you, just math tells us 999 will end up blowing their account up, and that one person may be rich. So I think at the very tip of the quote unquote end cycle that we're in, you have to imagine that COVID came right at the absolute frothy tip of the bull market. We saw, a little bit of protectionism with Trump and the trade war. We saw a little bit of oscillations in the market there, but we really were kind of at the end of that market in starting to raise interest rates, and then we had kind of this black swan event. So I mean, the answer to the question is I really don't know. It'd be really interesting if we did this exact podcast in 8 years, and we kind of did a case study looking back after we see kind of treasury yields rise, mortgages rise, commodity prices rise, your average day goods rise, people going back to work, people spending money on gas in their cars, driving to work. And we kind of see a return to normalization. I don't know where we are. I don't know if, honestly, as I said, I don't know if we would be having this conversation if it wasn't for COVID.
I mean, it makes me want. Oh, sorry, Jesse, go ahead.
No, I was just thinking, especially now with the with the lack of sales data, and what's crazy is that this market only came about almost a year into COVID. So it really makes me wonder, like, let's say if we kind of try to, I keep trying to I keep comparing cards to NFTs or NFTs to the card market, but the card market was booming in 2019 going into 2020. It had a pretty good year run. It was a more healthy run than something like the NFT craze in 2021. But while the country was shut down in March of 2020, the collectibles in general and the card market took quite a bit of a hit, like 25 to 30% of basically the overall card market went down. And then all of a sudden, people that were in it since 2019, they just saw this as a buy opportunity, and then prices just started going up like crazy, especially with people's free time at home. Here I honestly, I don't know if if NFTs would have had the same bull run in March of 2020 as cards did. I mean, I could be totally wrong, but we're just not seeing as much of as much data there, and we're not seeing like a more healthy appreciation and increase in value.
I think the thing that concerned me the most, just about this in general, and the reason that I'm so glad you came on here is that I see a lot of influencers, and many of them are people that I follow and friends of mine, and they're really pushing the positive side of this, that it makes it feel like there's no bad can happen. And I guess with what you do for a living and all the research that you do, I guess my question would be, are we at the bottom of this yet? I mean, is this as bad as things are going to be? Or is there something in the future, a wave coming that people should keep considering when they decide to dive into things, whether it is cards, whether it is NFTs?
Yeah, no, that's fair. And especially with something that's extremely early on, when you talk about kind of support and resistance and kind of buying the dip, we have an extremely small set of sample. We have to understand that NBA Top Shot was kind of the first on the scene and kind of give them credit. So I would really like to see, how this crypto risk assets kind of flow during a bear market. We really haven't seen it. And we see really a new generation of speculators that have never seen a bear market before. They're really asking the question, what has my USD dollars kind of done for me? When in the background, they don't know that, the US dollar has been the lubrication for global trade. It's the reason why you have the deflationary pressure. It's the reason why you have cheap labor that gives you the cheap costs that you have. I think a lot of media has kind of pushed the money supply aspect of this, but they haven't really looked at the velocity as well. So quantitative easing is not so much about money printing, but it's also about encouraging the spending. And we really haven't seen that too much. So as we kind of look at what's in the future, there's the deflationary crowd and there's the inflationary crowd. So on the deflationary crowd, we kind of say that, listen, technology has been a huge aspect in driving prices down. Apple somehow produces in China and has a camera on their phone that, 8 years ago was worth $5,000. So we have that kind of cheap labor. We see corporate tax rates falling quite a bit. So there's that kind of aspect of deflation. We see when there's, fear in the streets, people kind of hoard money. And then on the inflationary aspect, we have, listen, we today we printed retail sales. We've seen CPIs. We've seen purchasing manufacturing. We've seen the highest purchasing manufacturing since 1992, mixed with the lowest inventories possible. So we're seeing this accumulation in a rise of commodity costs with, sort of this pressure of constrained supply chains. We have CPG companies that had a run on their products and dry goods a year ago today. How do they plan for their inventories when they rely on something that grows from the ground? It's extremely hard. So we have that. And also we have a government-led recession. So we have people that haven't spent money on leisure, travel, gas, eating out, that have really had this $1.6 trillion kind of sitting on the sideline. And so, for instance, somebody that drives to work that hasn't done it in a year, how do you replicate what you've spent in gas when you have to go back to the office? You can't spend that twice. You can't kind of make that whole and spend what you would have in 2020 in gas in 2021. So I do wonder if people will spend that on leisure as the inoculation rate continues. And I really think that points us to the topic of discussion of NBA Top Shots of what does that mean for the Federal Reserve? So the Fed has a few mandates as far as inflation. We look at maximum employment before they raise interest rates. And the Fed has told you, over and over again, we are not in a hurry to raise interest rates. Inflation, no matter how skewed, how we measure it, we're not going to raise rates until 2023. We saw New Zealand in 1989 really take a look at how we measure inflation. And funny enough, since then, how we measure inflation has gone down. So there's no secret that members of Congress are able to hold individual names, and that we greatly benefit from low interest rates from a frothy risk asset point of view. We saw Trump over Twitter tell Jerome Powell, don't you dare raise interest rates or you're pretty much fired. So this kind of frothy appetite has really set us up where we are. But we'll really see. I mean, we're due to see the biggest rise in economic activity in 40 years. So nothing right now really matters. What matters is when we get to Q3 and we kind of see how we spend that money. And if the inoculation rates continue and we sort of get, the businesses being open and we kind of get that crowd to really take in the inoculation rate. And I'm missing the word here. Kind of the what is it? Oh my God, we have to cut here.
Yeah. No, you're good, man. Keep going. It's
we see the oh my God, what is it? What is the word I'm looking for? The
immunity.
Yes. So Nate, how do we do this?
Yeah, you're good. Don't worry. Keep
going. So as we kind of see inoculation rates hit 70%, we kind of see this crowd immunity come forth. We see businesses sort of open up. What happens to inflation when we have too little goods with the supply constraints, and we have too many of the dollars, and we really see inflation pick up. We then will see interest rates rise, cost of living go up, people have to return back to the office. What happens then, especially if you increase the supply of these moments and you have other sports, celebrities, musicians. So I really don't know where the price action goes. It really should be interesting to see what happens when we see a pullback in risk assets to something like these NFTs.
Matt Kelly on the last podcast, he asked me a question about Top Shot in general and what I thought, and where was it at today? Because obviously you're aware it took a pretty significant hit recently. A lot of people saw massive dips, which it happens in all markets. So not to crap on anything, but there was a pretty massive dip recently. And one of the points that he made, and I think it's something that you're reiterating in a way right now, he basically said that we're going to go from a commodity of things to a commodity of experiences. And that may be where you're talking about how people are putting a lot of money into these things right now, right? Whether it's NFTs, whether it's cards, whatever it is that they can't go do, they're spending money on that remotely. And when things open up, when more people are immune, we have herd immunity. If we ever get to that point, I'm sure someday we will. But when this all takes place, or we open up events where people that have been vaccinated can attend those events, that then creates the opportunity for the commodity of experience, and people go back out and start enjoying dinners and travel and leisure and all these things. What does that do to, even cards to that point, or these things that are things, essentially, is what I'm saying. What happens to those? And that's kind of concerning as well. But yeah, I think best case scenarios, things obviously open back up, and almost in a free market sense, whatever's best will survive the future change.
Yeah, absolutely. And we see during recessions, luxury goods, things kind of recede, as we saw during the global financial crisis. People loved the McDonald's dollar menu. And as we see kind of that shrinks, at the same time, people who are, like we said, your middle, average class citizens that have made 1,000% on Top Shot, and they're sitting potentially on auto debt, and they have other needs. What really happens then? And it's very easy, like we said, in 280 characters to kind of give your bullish thesis. But when we have Corona, and for an entire month, not a single person was touching any sort of risk asset going along, then it kind of opens up the eyes. At this point in time, it's very rosy and it's very easy, when you see people doubling their money overnight, to partake in that. But as we kind of see the long-term cycle, we see people kind of guessing where these assets will be in 15 years and such, and that's extremely hard against the macro drop. These tech companies really haven't made any money. We saw in February, treasury yields rose, Bitcoin fell 20%. We see these frothy tech companies that don't make any money, they fell considerably. So even if we see a bump in treasury yields or a Fed governor even talk about raising rates, it pulls risk assets back. So what happens when we actually enter into a recession of some time? What happens to those risk assets? Are we going to see these long lines and queues of people lining up to spend exposable income when they actually don't have it? So yeah, I don't know, you don't know, but I think it's only fair once we kind of see the price action kind of recede in an actual economy, then we can actually make a truthful assumption.
Corey, I know you said it's impossible to see 10 to 15 years from now, but do you think beyond the craze that we're seeing right now, or that we saw earlier this year, now we're seeing more of a bear market? And I know you said people that have been in this space for the short amount of time that they have been, they haven't quite seen a bear market yet. So it's interesting to see how people are reacting right now. Do you think that there is a place for NFTs within the collectible market beyond 2021? I don't know. I don't know what a good time frame is. I don't know if 2 years or 5 years from now, honestly, I'm not, just at some point within the foreseeable future, if there's a place for them within the collectible class, if they'll even be worth, if they'll be seen as both legitimate collectibles and as a viable asset. And if not, what improvements do you think need to be made either from Dapper Labs or from other NFT companies or corporations to retain a legitimate collector base?
Yeah, I mean, I really don't know. I mean, we're still so early kind of in the cycle. I don't know if people who are investing in them now are holding them, for 10, 20 years. It's very easy on Twitter to say you are, versus when, the market's kind of collapsing and you kind of, pull out. So to be honest, I really don't know. We really haven't seen too much of examples of anything blockchain based with a recession. So I really don't know. We had a nice litmus test during COVID. In COVID, I mean, we saw risk assets, we saw crypto collapse. So I really don't know if we were actually tested. It's a very hard question versus, the short term versus the long term, because people say, hey, we're moving into this digital space. So I'm going to invest in this digital space. I mean, maybe in 15 years, the biggest top shots are worth, potentially more than they are now. I think that's actually very well in the realm of possibilities. But some of the cheaper, NFTs, I don't know if we look at top shots, if you guys are more in the NBA than me, but if you kind of see a mediocre plus player that has an above average dunk, where is he in 15 years? I mean, if you think back 15 years to the NFL, if it was an above average player that made a random kind of NFL catch, we see growing talent in these sports leagues grow. So I think at some point in time, it kind of becomes a factor of supply. We've seen the demand and we've seen the kind of random social media influence, but as that supply grows, I don't know if that can withhold at current times a recession. So if we kind of said that the NFT supply grows by 10 and the new wealth money kind of, just bumps up a little bit, I really don't know. And to be honest, I think Dapper Labs really don't want this very quick turnover and to make the quick 5% on these huge moments. I think Dapper Labs would absolutely want a longer term business model where they have people that aren't getting turned off by not being able to get a pack and not being able to get their money out. So I think it's kind of a strange dichotomy. We look at kind of the present and the price expansion, and then we look at where is this going to be in 5 to 8 years when the supply is exorbitant, and the economic conditions have maybe tightened a little bit. It's anybody's guess what happens at that point in time.
I definitely don't want to end up the guy who pushed back so hard that it totally flamed him in the future. I mean, I certainly was not a believer in cryptocurrency in its infancy, right? I think there was a lot of people, I mean, and I'm sure you maybe from an investment standpoint were one of those people that were like, look, we don't know anything about this. Large sums of money being dumped into it doesn't make a lot of sense. It's a good way to lose large sums of money. And then on the other hand, we have, 23-year-olds driving purple Lambos, right? Because of it. So, here we are today. And I look at the NFT space as a whole, and I realize that there's certainly something here, right? As you said, that we're going into this digital media world where all of this stuff is going to continue to grow and foster, and companies are going to recognize the success of this moment in time. And whether we become a commodity of experiences again, people are still going to chase what was successful right now. So I think for those reasons, we're going to see this trend continue and sort of, in a minor way, the success of a lot of things, because something has to fail, right? Not everything can be successful all at once. And just like the players that you mentioned, Jesse and I were talking about this when we were trying to get the Skype stuff set up. You've got these random players with random plays, and people are listing them for whatever they can because, again, I think it's a cash grab. But at some point, something has to be worth nothing. Like, we will get to the point where you open packs and it's not worth shit. But that's the risk of opening a pack of cards, is that you could spend $50 on an old pack or $8 on this pack or whatever and open it and nothing in it has any value whatsoever. What throws me off about Top Shot is we don't have that. Like, what's the cheapest Top Shot you can find? Then I have to go look. Is it $15? I mean, I could open a pack of cards right now and there'd be a card in it not worth a penny. I mean, it's probably worth what it was cost to produce, right? That's it. So I think that's one of the things that I continue to worry about. And like you've mentioned, if I had a Top Shot, if I had a moment that had $100,000 value, I'm selling that instantaneously today if I can get it. I'm not even holding for the future because I don't know if this is going to be here. And when is the next chance that I'm going to, it's like a lottery ticket. When's the next time I'm going to spend $8 on a pack and hit on something that's worth $100,000? You would cash out. Why would you wait, right?
Yeah, absolutely. I mean, I think if you can rip a pack and instantaneously, without a doubt, kind of retain, increase that value, it kind of becomes a speculation grab. So, I mean, when I was a broker, I talked to a ton of speculative investors in tons of different instruments. And if something is kind of too good to be true and you're kind of promised this exorbitant return, typically it's not going to work out. I talk to investors and traders and they say, I want the little risk possible, but the maximum reward. And I tell them that really does not exist. And we kind of looked at asset classes. You have to risk to reward. So I think history has proven to us, if you walk in with that attitude, the rug kind of gets pulled out at the last second as those big buyers kind of subside. So it can be really interesting, especially looking at who holds, a big part of the market and a big part of those, top moments. And really, no one expected COVID. Like I said, we saw companies like Apple who have more cash on hand than the yearly GDP of a country like Portugal, absolutely crater to those sort of pressures. So I think the moment you think that you are invincible and you think for sure you know what's going to happen next is sometimes when that random overnight gap kind of catches you by surprise.
And I don't know if you're referencing, I had put a link in our show sheet and it mentioned Darren Heitner, I think is his name. And he put this tweet out with a graph that basically said that the top 1,000 NBA Top Shot accounts are worth more than the remaining 350,000 accounts. And over half, or roughly 800,000 users, have never purchased a moment. So it's really imbalanced when you look at ownership and its sort of value in the market. But I guess it would lead me to asking you, so the people that are in, the people that invested heavily, not because they were the first people to buy in and see an artificial inflation and sell and make money, but the people that were too late and overpaid and are now in the market and they're invested thousands of dollars, let's say. What do you say to those people? What should those people do? Is it like the world of stocks? Do you just hold and wait for a rebound, or do you cut your losses? I mean, I know you can't predict the future, but if you're in that far and you were late to the dinner, what do you do?
No, that's actually a good question. I think it relates all back to trader psychology, and it doesn't matter if it's Top Shot or physical cards or derivatives or equities. Before you get into a trade, you have to know two prices. You have to know when you want to get out on the top side, and you have to know when you want to get out on the bottom side. I think a lot of people have misinterpreted this quote unquote diamond hands and all this paper hands and all of these stupid memes, when in reality, what that actually means is if an asset goes against you and you say, for example, I will take a 30% haircut on this, that means when it hits 30%, you get out. And I think a lot of people have actually reversed that and they say, I am down 75% on this investment. I am diamond hands. I'm not going to get out because I'm just so cool and it doesn't affect my emotions. When
Right.
you've completely, gotten that entire take wrong on, and you wouldn't probably last the first round of interviews on any place on Wall Street. It's all about managing risk, and you have to know those levels. And for those people, when you take on a risk asset, if you have, let's say, just say $1,000, and you say, I want to risk, we'll say 400. You probably shouldn't get into one asset and then risk that downside. You should probably get into four or five and then risk, a bottom percentage there, and then kind of double what your potential loss is and say, if I invest $1,000, if I want to risk 400, that means maybe I want to gain 800. And then over time, I only have to be right, half the amount of times, and I'll be profitable. So my advice to those people is be prepared for the next surge. Do your research, do your education now, get your brokerage accounts set up now so you can take advantage of the next rocket that takes off and you are in a position. So you aren't the person that's texting me when GME is at an all-time high. You're asking me, how do I set up my brokerage account? How do I trade options?
Right.
What you should do is do your homework now and then be ready for when that next asset bubble happens. So with that, we really don't know. NBA Top Shot is at, like we said, at its infancy stage. And as we look, when we're recording this podcast, we had Johnson & Johnson just had a vaccine that caused blood clots in 6 females. That's 6 out of 7 million. You could go to your Walgreens and buy any over-the-counter drug and have something give you blood clots, much more than 6 people out of 6 million. But how many people out of that are now not going to get a vaccine? And how long is that going to push forward the below 75% inoculation rate? I think 6 people, 6 very small class of females who had the blood clot, them pushing people for not getting the vaccine may have then in the future pushed the Fed for not raising interest rates out another month or quarter, and that have raised billions of dollars to market cap to kind of tech companies. So it's really interesting as kind of you look at the bad news versus good news, where we're kind of in a cycle now where bad news might actually help the deflationary cause and help push back the Fed to raising interest rates. The Fed is giving you every excuse possible why they want asset prices to rise, and they're not going to raise interest rates. We need maximum employment, even though people who work these low-paying jobs are getting paid to not work and they won't come back to their jobs. We see a lot of deflationary pressure kind of across the board in that sense. And so if that continues and if the Fed pushes out their interest rate rises, that will help these risk assets. Whereas if the vaccine rollout is perfect and everyone is inoculated by late Q3 and we open back up, we hit inflation, we raise interest rates, that'll hurt these sort of risk assets. So it's kind of counterintuitive, but if you are long these frothy, double your income overnight, like things like Dogecoin, you actually want kind of bad news to happen, and you want the Fed to kind of have every excuse possible to keep this circus going.
I think just one thing you said in that explanation is that I think that it applies anywhere, but NFTs, cards, alternative investments, more traditional investments, is that if something doesn't go your way and if you've put your money into something, it's always wise to, even before you put $1 into something, always have a price in mind, or a price point in mind of whether it appreciates or depreciates over time, of when you feel like you should get out, even before you look at the asset altogether in the first place, and before you put any money into it. And I thought that was a great point that you made, and it applies everywhere.
As we say kind of in the street, I mean, green on the screen. Your entire point of getting into this is profit. Green on the screen. It's making a profit. If you're into this for making a profit and you take profit at 400%, the risk of you kicking yourself versus a little more return versus that kind of subsiding to your break even. We've seen the kind of the odds of that happening, and then trader psychology happens. So if you put $1,000 into a risky asset and it goes up to 4,000, and then it goes back to 1,500, you're not going to get out. You're going to wait until that goes back up, and that kind of goes below your cost basis, and you're going to wait. So you want your reason to get out not dependent on the market. You want to set your risk parameters before you get in the market, or else you're going to tell yourself every story possible. Especially right now in the frothy assets, if you bought an NBA Top Shot and it went down 20%, why is that? If you can't explain that down to the absolute detail, then you have to be expecting that could double in price, that could, chop in half. And that's why we have those risk parameters, is because you just don't know. You can't will the market the way you want. And we kind of see that in fantasy football with an unproven prospect. People kind of fantasy want, and once they kind of fantasy want, they never relinquish that sort of take.
I feel the same way about Chase Edmonds. I feel that's been going on for far too long. People fantasy want, and it's just not going to happen. I don't see it this year either. Let me ask you a question. When the economy opens back up, when we hit herd immunity, when numerous other sports NFTs come out, whether, even you brought this up, baseball, football, hockey, all these other things are going on. Speaking about Top Shot specifically, what do you predict? If you had to make a prediction, what's the long-term prediction for Top Shot as a whole? Does it maintain this strength and this popularity, or is the economy of experiences and more competition and a different market, does that really squeeze the life out of it? And is it just another thing out there in the universe?
Yeah, I mean, if we kind of roll back to the Q1 and we see the retail stock trading explosion, that seems extremely present. But when in reality, retail stock trading is back to pre-COVID levels. So it kind of seemed like everybody and their mom all of a sudden became a day trader. That's very far in the past now. So I don't know really what's going to happen as the economy opens up. And as people don't have the time to sit in line, they're not, getting these stimulus checks. Maybe they don't have the easiest monetary lifestyle in the history of humanity. I think all these things have come to a point that have reached, the feverish aspect of NBA Top Shots. But, it's a hard question because there's the short-term price coming back, and then there's the long-term appreciation. So I think it's kind of two questions as far as what happens to the price of the non 1% kind of moments in the next 18 months, and then kind of what happens in the next 7 to 8 years. I really don't know if the technology for the metaverse will be here in a few years. Well, like I said, it makes a lot of sense in 280 characters. But we'll see if people are kind of on their back in their VR goggles, as you say, kind of seeing the Swiss Alps and kind of showing their friends. I really don't know. If I had to make a strong take, I would say that 99% of those Top Shot moments are probably going to decline in value. And I think maybe some of the absolute rarest LeBron James will probably appreciate in the long run. It really all depends. I mean, all eyes will be on the market in Q3 as we see just how intense this inflation is. And, we had a hot print today. We had a hot print on PMIs earlier. This very well could lead to something we haven't seen before. We saw the Great Depression came on the heels of the Roaring 20s. And as, kind of feverish speculation took place where, they said your average janitor or your everyday person was putting their savings into the stock market before it crashed. So we really, at this point in time, don't know. And if anybody is telling you that this is the collectible to have in 15 years, they're probably wrong. And if somebody thinks that, this is a Ponzi scheme and it's all going to go to zero, I think that is probably a little bit wrong as well. I think you have some wealthy buyers that have entered the space that may have the luxury not to close when the economy kind of rescinds. I think we'll all kind of see. But I am very interested in the supply aspect and kind of Top Shots being the first to market when there is, even in themselves, kind of if they get the licensing for all the different sports, I kind of think within themselves, what is the competition? So I kind of turn the question back to you. I heard Dapper talking about, the rarity of a card that is, the pop count of their birthday or, kind of one of whatever. Does that hold true in the physical card market? Or do you kind of see all of that as kind of, the greater pop count kind of as a whole?
Jesse and I were literally talking about this pre-show because what I found out with the Top Shot moments, I had made a point on a show where I said, how are they going to discern a difference in value from one moment to another? Let's say they print, or let's say that there's a digital asset version of a LeBron James dunk, and there's 100 of them out there, right? And it's numbered 1 through 100, and they're all exactly the same because unlike cards, there is no difference with the quality of them, right? They are literally a 1-for-1, all 100 of them. So you find out, I said, well, how are they going to do it? They're going to have to make the first of the 100 the most valuable, right? Because there's no other way to necessarily peg a value to it. And suddenly that's what we found out they did. And Jesse and I were talking about it, and it does happen in the card market. And I'm sure Jesse can speak to this a lot more. It's just such a curious thing. In cards, I think it's less of a powerful use because there is quality differences.
Exactly. Yeah. In cards, grading essentially builds in a type of scarcity. So whether it's, like a base card or something, like if it's a base card, it's more artificial scarcity just because companies like Panini and Topps, they don't tell us the true print run of a certain card unless if it's serial numbered. So there may be a PSA 10 pop count of just over 100, but who you never know. There could be 20,000 of these things printed. Just, not. We might see numbers that aren't dissimilar to Top Shot. Moment, like whatever the moment is out of, the moment count. So grading definitely it trumps, I guess, a serial number. But I mean, if you have something that's a rookie card that's numbered 1 out of 100, 100 out of 100, or maybe the player's jersey number, and assuming all three of those serial numbers are in the same grade, same condition, they're all PSA 10, then those three cards that I just mentioned, those three serial numbers will have a premium over, something that's number 15 out of 100 or 70 out of 100. Just because that's just it's just how it is. People like seeing or taking ownership of the first card that was produced in like the assembly line, or the last one, or the one that just represents the jersey number. I've even seen cards that are number 23 just because of the significance of Jordan and LeBron. Like it's so obscure, but even something like that I've seen have a premium over any other serial number, assuming they're all in the same condition. But yeah, for sure, grading and the condition of the card trumps. It'll trump the serial number first and foremost.
If you're a person though that appreciates, let's say you literally, like art, appreciated a moment. Let's say there was 50 people that appreciated a moment, and they didn't really care about the long-term value of it. They would look at numbers 50 to 100 versus 1 to 49, right? Because what does it matter to them that the value of it is higher. If they're buying it because they want to appreciate what it is, as a commodity. I think that's kind of where I keep going back to it. I struggle with the idea that we don't know how they're valued, and then they're only valued solely on which one is the lowest number. And it's just such a strange thing when you sort of reflect on it. But again, much like artwork in the eyes of the beholder, that's how this takes place. But so Corey, you got me sweating. I don't know whether I should be buying Top Shot, shouldn't be buying Top Shot. Your prediction of the future is that 99% of them will probably be worthless, which is very well likely the case. Is there something that we didn't get to, that a point in this subject or an idea that we just didn't touch on that you wish we would have said at this moment?
No, I don't think so. I don't know how people represent that number, like you said, the number 23. If we look at artwork, it has nothing to do with the number. It draws back to the quality, and really what the artist kind of made. So it seems like it's, and you guys can tell me more than me. The art, it's kind of random. I mean, you kind of get in line and you kind of get something, and it's got a number that has some sort of significance. But whereas the art world, you've acquired something that nobody else can replicate, and I think that is kind of the big draw for art, is that I can show you the art piece on the wall and you can't replicate it. Whereas with an NBA Top Shot or an NFT, I can show you something that's literally 100% the same thing on my computer. So yeah, I have no idea where the value of that goes. I have no idea, in 20 years, if we're walking around in this augmented reality, if someone kind of points to a painting and says, I bought this in 2021, look at this metadata, it's the original, versus if you go to your friend's house and they have the same thing, and they paid, 0.0001% of the same thing. I don't really understand that quote unquote flex. I don't know if that has to do with the appreciation of crypto as a risk asset. I really don't know. And I think we have to come back to this conversation once we've seen an economic downturn and really can kind of point fingers. But I don't think anyone who is super bullish in the space or super bearish really has an appropriate take until we see an actual market, come to light.
I think that makes it the most likely would be, as you brought up, the augmented reality. Like that is the universe where I picture this being the most successful, where, yeah, you are walking around with VR headset, or you can have these things displayed in such a way that they're readily available. Because right now, how do I show some of my NFTs or my digital artwork? I pull it up from a phone, which everybody has on them all the time, which is a likely answer. But I don't have a piece of artwork that's 6 inches by 3 inches, right? Every piece of artwork that I've ever owned is significantly bigger. I mean, so it seems like you have to sort of bend your mind into a world that's either fully digital that you're immersed in, or we find a way different to display it. And these moments, I think, because they're novel, because they're the first, it's created a unique situation. And that's what's really helped it survive. And that kind of takes me back to that question before. When the market's flooded with competition, with other sports, with competitive sports, even with football, basketball, we have different companies making different cards. When you have similarity, what does that then do to things? I mean, it's not an impossibility for Top Shot eventually to maybe not be the most viable NBA creator. And maybe they don't hold the licenses, right? Maybe it shifts. So how do we then value the old producer of the cards when Top Shot had the license for NBA from 2020 to 2026, and then suddenly from 26 to 2035 it was some other company? Do we then still value those the same way? Are they more valuable? I think there's a lot of questions that you can ask on the subject. And Jesse, I don't know what your thoughts are on that, because we know that is their football contract runs out at the end of, is it this year? Is it 2022? Is that when Panini loses their NFL?
I'm not sure, actually. I'd have to look that up, but they've I think they've been they've had the exclusive rights to produce football cards since 20, I want to say 16.
16, I think it is.
2016. Yeah.
Yeah.
So yeah, I mean, it could be running out in 2022 or 2023. I'd have to look it up, but yeah, I've heard rumblings myself that their time is coming up soon, unless if they extend the deal.
Yeah, so I think there's a wide variance of outcomes out there. I'm just glad, Corey, that you did exactly what you said you were going to do. You came from a point of neutrality and really kind of played both sides of the fence. And I think it put a perspective on it that I haven't heard from anybody else. I've listened to a lot of other takes on Top Shot, NFTs in general, and it's always more from sort of the digital point of view. What will the future be? What's the interest right now? And nobody really talks about how did we get here and where are we going? And I think that this is probably going to open a lot of eyes for people because, I mean, this is a subject that clearly you have a wealth of knowledge in. And it translated to NFT and Top Shot is really important because we've got a lot of people that I think most people are attempting to sell, but there are people out there that believe it's the long term. And hearing what you're saying should concern people that aren't holding things of vast rarity. And I don't know if that's sort of your belief that short of holding something that is rare, maybe you shouldn't necessarily be holding anything at all.
Yeah, I guess what is rare, and are you kind of De Beers who are hoarding diamonds in the basement and kind of controlling the supply? I mean, if you took advantage of the blockchain and you invested in, let's say, a dinosaur fossil, that's nothing I can pull out of my ass. That's something I can replicate and create a digital copy of. I couldn't make a plastic version. That'd be worth nothing compared to the real thing. So I think kind of as the money supply in the US explodes, I think people have gravitated towards the word scarcity, as they should. But I think they have to be very careful when you can literally, by a click of a button, add a comma or a zero onto a supply, kind of put a border around it and say, hey, it's kind of limited, versus, if this hysteria happened versus, collecting a player's shoes after a game, that is one for one. There could be a ledger for that. That is truly very unique. But for some reason, because we say something is one of 2,000, that somehow adds additional value. So, I'm not too sure. We have 150 years of cards. We have more of that kind of in stamps. So as collectors, I kind of bring the question back to you. You've seen cards and stamps and things like this that are more recent have a high value versus something that's a century old that is worthless. I mean, I personally have stamps from the 1800s that are worth $0. So I think a lot of people think they're first to a segment, and first equals the highest future representation of that cash flow. So I guess, can you guys speak of pop count versus time, in kind of the relation to that in price?
I mean, it really just depends on the asset first and foremost. It depends on the player. You'll have with something that's serial numbered. I mean, you can have I don't know, a 1-of-1 Trae Young, or I'm even trying to think of somebody more obscure, maybe like somebody like a Karl Anthony Towns, or even a 1-of-1 Justin Jefferson. I mean, something like that isn't going to go for nearly as much as Michael Jordan's main rookie card, which there are over 300 of. So it really, I think in terms of cards, it depends. It mostly depends on the actual athlete and the card itself first, before even looking at scarcity. I mean, I guess you can say that to an extent. I mean, I know there are certain rookie cards that are, were at one time seen as valuable, but then all of a sudden, like one that I'm thinking of right off the top of my head is a 1986 Topps Barry Bonds rookie. And that sounds like a really big card. That sounds like, one of the best baseball players of all time, the home run leader, no matter how controversial he was. But there's over 50,000 of them graded. And it's wild when something that had so much potential and was so overproduced in the time when that was like, that really kind of kickstarted the junk wax era in the mid to late 80s. So I mean, it's kind of a balancing act where you look at the player first and then the pop count next. But if the pop count just severely, like if there were over 100,000 of those Michael Jordan Fleer rookie PSA 10s, they're not going to be worth $750,000 ever, not ever. I don't care if there are 5 million people that want that card. There's 100,000 of them. It's not going to be that hard to get. You're going to see them pop up on eBay and other online buy and sell platforms over and over. They're not going to be that rare. So, yeah, with cards, it's certainly a balancing act.
My dad, massive stamp collector, massive presidential autograph collector. The stamps, though, have lost a ton of value, but I think what gets forgotten or has a lot of built-in nuance is adoption, right? Like the people that continue to buy into something or keep it alive, right? You've had a ton of people that have adopted what's taking place with Top Shot, and obviously we have a long-standing level of adoption with sports cards, and that's what's kept it afloat. That's kind of my concern long term. Is when you price people out, like if you only people can really only afford to buy packs, right? I don't know what the upper level of the people that have the most monetary disposable income are, but most people can only afford to buy packs. And many of those people aren't buying the $230 most expensive packs because for a lot of people that really price them out. So I don't know what happens in the long term when people can't get packs and the only ones that are available are maybe too expensive. And then when they're getting packs, they're not getting hits. It's like that's where you lose your adoption to me. And then you necessarily need people to bridge that gap that is, there's no real way to display these, right? They're not physical like cards, they're not like artwork. You then necessarily need to get those people to continue to commit, to stay in that adoption period where they're not really getting great stuff. They can't sell their stuff. They can't buy the stuff because it's too expensive. And there's no way to display it because it's so new wave that it's not, how do you show it off, right? You need a collective community. And that's what we have. The card world has it, and clearly, Top Shot has it. There's Discord groups, websites, forums, all that. You really need a community to make it survive, I think, and to go through this period. And if there is a deep recession, worse than what we've already dealt with coming or whatever the future is. And again, Corey, you would know way better than I would on this subject. Are those people going to band together and stick with it? Because those are your buyers. That is your basis for your platform. And if those people decide to go, what happens?
Yeah, no, absolutely. And we don't know what really happens until we're kind of faced with that. And I think that kind of holds a testament to cards and maybe stamps to a little bit is, we've had periods where if you have a box of rare stamps and let's say they're worth 10 grand and we go through a recession and they continue to sit in your basement. And then, by the time we kind of get lifted back up, you haven't sold those. Whereas I think with NBA Top Shot, we have people literally staring at the price from minute to minute. So I think when that happens, I think people are in this feverish moment of speculation. I think quantitative easing has left them with not many outcomes. You can't put your money in a savings account. So it's people really chasing yield. And I think that the points I made earlier to, the monetary and fiscal stimulus and people being at home and having the excessive money has really kind of pointed us in this kind of this right direction. So like I said, I don't know where we're going in the future. I don't know if it really has any sort of utility. But yeah, we will see, once we have an actual dip, when we have an actual sort of recession, we've had some tremors, but I'm very curious if this were to happen, kind of pre-COVID, what the Top Shot market would look like if we had, everybody running for the hills, buying US dollars, parking their money in safe haven assets, and leaving, even parabolic assets like Apple and other tech stocks. If you're selling Apple in some very, very sexy tech stocks, during COVID. What are you going to do with a kind of a random layup by somebody that you may have made 50% on? I really don't know, and that's kind of why it comes back to kind of psychology and what people think at the time, and if the social media kind of influence continues. You can't go on Twitter or Saturday Night Live without people talking about NFTs and NBA Top Shot at kind of nauseum. So as we know, cool things always kind of subside. And when that happens in an asset class, you typically have a run. So again, I don't know where this is going to go. But the only thing I'm saying is kind of all signs point to being kind of the perfect scenario for the price accumulation of NBA Top Shot. And that's certainly not a discount to Dapper. They've made an incredible product with incredible profit margins at the right time. So kudos to them. I'm just kind of bringing a point of view of how have we gotten to this point, and what are some possible scenarios of where this could potentially go.
Well, Corey, let me hit you with one final question before we get out of here. And I'm going to make this easy on you. If I gave you $10,000 and I said you can spend it on only one item, and it's of your choice, any player you get to choose, and you could choose between a Top Shot moment or any card that was $10,000 in the universe, what are you selecting?
Oh, God. Well, I know absolutely nothing about NBA. I only know about really soccer and NFL. But honestly, if Jerome Powell and the other Fed governors are saying, listen, we're not going to raise interest rates for a while, even if we have inflation, we are the government. And even if CPI has been skewed to show that CPI and inflation really isn't impacting the economy when it is, we're trying to hint, wink, wink, tell you that risk assets will continue. I would probably buy an option on a tech ETF that's like 3% out of the money and try to 10x my money. I would probably be extremely risky with it. I'm a very kind of risk pro person. So from a card perspective, I really don't know. So that's a terrible answer to your question, because I don't know anything about NBA. The last NBA game I watched was the Detroit Pistons versus the Los Angeles Lakers, when the Pistons won the title with Chauncey.
It's like 05.
So, sorry.
That's good. That's a while back. Well, man, I'm so glad that you reached out on Twitter, because in all honesty, man, you are, again, a wealth of knowledge. I've yet to listen to anybody that was as eloquent and intelligent and thought-provoking with the statements that we're making as you are. So this is a great interview, and I'm glad that we'll be able to share this with people. Is there anywhere that people can find your artwork? Is there a place that you've got it listed that people could check that out?
Sure. Well, I guess before I dive into the digital artwork and can sell my product to 7 billion people, you can find my artwork at CL Paintings on Instagram, and CL Paintings at Gmail. If you have an inquiry, I do ship all throughout the U.S. And then my Twitter is Fantasy Numbers, and I try to kind of blend what I've learned working in risk management and in the markets, and learning about game theory and sort of things like that, to best ball. So I kind of try to compare my experience trading to best ball in NFL, with the occasional kind of asshat comment about the market. So that's where you can find me for now. And I really appreciate you having me and kind of giving a contrarian opinion to this space.
I love it, man. Well, I really appreciate having you on. I know Jesse does as well. We've been going back and forth. We're working on this show information, and we're like, what do we ask him? And, how do we make this work and try to put it together? And you really made this very easy, because it's just clearly something that you've spent a lot of time, doing your research on. So thanks, man. Everybody check out Corey at Fantasy Numbers. Check out his artwork. That would be a huge bonus as well. I'm going to check it out. I still don't know what it is that you do necessarily, other than the fact that it's abstract. Is that one behind you?
Yeah. You really can't see it. Yeah. I've been painting my whole life, but I use pour painting. So I use gravity, not a brush. And then I use a torch And I try to bring out some of the more dense colors within what I've painted kind of under it. And then I kind of just tilt the canvas and I kind of go from there. So it creates a very unique piece, and it doesn't take me 30 hours like it used to with a brush. It takes me only a few hours. So it's a fun way to paint, and I really enjoy it.
Awesome, man. Well, thank you very much for coming on, guys. Again, follow Jesse on Twitter at planet_fatness and on Instagram at flippity_flip_cards. Another great one. And we will be back next week on Clear the Cache. Awesome, man. Well, good
Cool.
stuff,
Nice.
dude.
Thanks,
Thank
Corey.
you